Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, so we're just before market close on Friday, August 27th. I wanted to hop in and share the trades that I placed today, the buys that I placed today in my larger accounts as swing trade positions. Now, before we run through the tickers and have me point out what led me to take the positions on the chart, I do want to mention the exit strategy because I keep getting this question and it's just standard. So hopefully this means folks will hear it. My exit strategy with these is if it falls below the nearest MA, the nearest moving average, you see in red the 200, in yellow the 50, and in purple the 20. So in this instance with Palantir, if it falls below the 200 and it can't hold it there since the 200 is the nearest one, that would be a stop loss for me. That's why I would choose to cut loss. On the other hand, if it goes my way and once I hit about 5% profit, I go ahead and set a trailing stop loss of 1 to 2% and let it ride until it hits that stop loss. Sometimes it goes up quite a bit. That happened with Penn before it triggers. Sometimes it triggers it relatively quickly and then it runs more afterward. But I'm okay locking in the profit. I don't expect to catch the entire move every time. My goal here is to catch most of the move most of the time. Okay, and so if I leave some meat on the bone, I leave meat on the bone, but I also try to limit the losses, and that's where I step in to stop loss if these close below the closest moving average, and that's going to be different on different tickers. Some the closest one is the 20, some the closest is the 200, some the closest is the 50, but those are the ones that I watch. Okay, so pretty simple. So I won't mention my exit strategy on these because it's just the thing that I just described. Now, the reason that I jumped into Palantir again today was because to me, it looks like it has renewed hope of extending this rally. I don't know. It could still continue to die down, but we do see here the histogram picking back up as the real estate between the signal line and the MACD continuing to expand. I don't love playing these a ton when they're well above the baseline. Well, it's not well above, but it's certainly extended above the baseline. I would rather pick up these crossovers below the baseline, but I also have this fib extension that I have plotted, if you've seen my other videos, and that gives me a price target here of $30.99. So I'm willing to see if that can be reached or not. But I'll still set that trailing stop loss along the way. That would just leave me room to jump back in for further rallies if this one continues. Obviously, that's to be determined. The next one I jumped into was Build-A-Bear, which had good earnings, I think. Right, had good earnings and jumped up, and now it's coming back down a little bit. And but it does have this bullish crossover here. I do see this increase in selling pressure, obviously. Looks to me like folks taking profit. But to me, it still was worth trying to see if there was more upside here. The 20 MA curling up toward the 50 MA, that could be, has the potential for a bullish crossover. That real estate is narrowing, so those are getting closer together even though we have red days coming in, and that could give it the push that it needs to jump up. Now obviously if it falls below this 50 MA like I had just described and closes below there, then I would consider that a stop loss at that point. If you see these here in these positions, these are not the positions that I'm talking about. Those are ones that I added to my small accounts, which if you haven't seen my growing $100 trading account from scratch, that's what those are there for. They just happen to overlap as trades that I've taken there as well. Nvta is the next one. This nice establish over the 20 MA you see here for the last 3 or 4 days, and today tested the 50 MA and rejected off of it. But to me, that's fine. It's good that it's starting to test that, and the degree to which it can continue to build pressure in that direction, that could be really solid. Also, it has this relatively recent bullish crossover, and it's well below the baseline. The only thing that I don't like about this setup at the moment, well, there's two things. One, the MAs are fully in a bearish formation still. 200 on top, the 50 in the middle, and the 20 underneath. But at least the price action is over the 20. But the other thing is this MACD, even though the histogram, that momentum had died down from this bearish histogram to this bearish histogram, the line continued to drag down quite a bit further. And so from that sort of trending perspective, it's still coming down. And where it's reaching right now, it's getting very, very close to this topping out area where it then moved back down previously. So to me, the risk here is essentially like this will probably go one way or another relatively quickly, and that's fine. You know, like I said, I don't expect to win every trade. I just try to control the losses if they do turn against me. Now, Splunk kind of batting around this area here. I've been a big proponent of Splunk for a while, and bullish crossover here. Now it's above the baseline, which I don't love, but again, I think that there's some buoying factors here. It's newly established above all of the MAs, so it's a long-term bearish trend being below this 200 MA, and now has just peaked above it. Now that doesn't mean that it can't fall back below it again and return to a bearish trend. It certainly could happen, but it would have to battle through supposed support of those MAs to really work itself through that. And we have real estate quickly closing between the 20 MA and the 200 MA, so we could get a bullish crossover there to just kick off a slew of bullish crossovers that could follow. Lemonade is the next one, the next to last one. So this one is a little bit riskier, similar to I think Nvta, yeah, on the MACD. You see the histogram, bearish momentum dying down, but the line being dragged down further. My hope here is that that just means that there's more upside to be realized if this bullish crossover can kick in some bullish momentum. Now, the things going against it, fully bearish formation on the MAs, hasn't even tested the 20 MA yet, so I don't know how hard it'll reject off of that if and when it gets there. And I guess I should mention on these where it's below the MA, so it doesn't have an MA to fall below, and so that exit strategy can't happen because it's already below all of the MAs. I would look for this MACD to turn bearish, and or I would come in and set myself a level of supply and demand. So maybe something like the 71.18, or if I wanted to let it breathe a little bit more, something around here around $67.5, $68. But I sort of wait, I give it a day or two to evolve and see what's happening. Again, because it's on the daily, so things aren't going to move super quickly unless there's like a black swan event, and just this for this stock, I guess that could be one, or the market as a whole. So unless something dramatic turns against this stock or the market, then things should move relatively in a way that a day, letting it breathe for a day and see where it's going, isn't going to have a tremendously terrible impact on the account. So in other words, if it comes down, 5% on Monday, I would come in and see where we are in our supply and demand zones here. I would see what the MACD was doing and try to make a decision at that point. And again, that's because we're already below all of these MAs, so I can't rely on it closing below there as being my stop loss. If and when it gets above the 20, then that would become my stop loss. It's over the 20 now if it dips below it, but at that point, if it's plus 5% or more in my account, it probably has a trailing stop loss on it already. Skills is the last one. This one felt a little bit chancy just because it's been beaten down so badly. Fully bearish formation on the MAs, newly crossover on the MACD, and a pretty lackadaisical crossover. So it's continuing to come up even though it peeled down the last couple of days prior to today. And so it is sitting on this 1032 supply and demand zone that I had previously charted, and it has a little buffer area there to 1004 is another tight end supply and demand zone. So we'll see how those hold up. I would sort of treat those potentially as stop losses. If it can't hold that 1004 and turns that into resistance, then that would be probably a pretty good stop loss sell signal for me. All right, those are my trades for the day. I hope that you had a great day trading and a nice week, and that you have a nice weekend ahead. As always, I appreciate you watching, and I will see you in the next video.